Joining us right now is the Gartman letter publisher and editor, Dennis Gartman. Dennis, great to see you this morning. Thanks so much for joining us. I know you look at technical indicators for this market. What are the technical indicators telling you, and how does oil and this dive in the price yesterday play into all of this?
Well, obviously the oil market has everybody's attention, and it's the change in the term structure that really had everybody's attention. The fact that strangely, unbelievably, inconsistent, just unbelievably that we went to zero, less than zero numbers, down what, $37 at one point negative. We actually bounced back this morning to where it got above about $1 higher. Now it's back negative again. A lot of pressure on the June contract, a lot of pressure going to be on the July and August contracts. This is uncharted, untenable territory, and I don't think we'll see minus $37 again in my lifetime. I certainly hope that we shan't. What this means is it is indicative of the amount of supply of crude oil that we have coming and the lack of storage that we have coming, whether it's in tankers or on ground. And crude oil is simply looking for storage where it can find it, and it's having a hard time. So it is I think indicative of an increasingly detrimental and weak global and domestic economy that I don't think is going to get better for quite some period of time into the future.
So you don't think the economy gets better anytime soon in the future because of this coronavirus, and you've got the stock market following suit with the oil market. How do you want to place bets then? Should you be just taken to the sidelines if you think that the economy is not going to recover anytime in terms of investing today?
Well, I trade only for my own account now, other than the fact that I'm the chairman of the University of Akron's endowment, but I basically am in the market every day trading for my own account, and I am trying to get a little bit short of stocks, not dramatically, but I think after the rally that we've had, which I think was predicated upon the amount of liquidity that the Fed and the Treasury have injected in reserves into the system, which is finding its way at the margin into stock prices, I think that's about to have run its course. And I hope I'm wrong, but I fear that we're going to try to make a test of the lows that we saw in middle March. The economy is weak, and the data that is coming out is simply going to be weaker and weaker for the next several months. Hopefully, let us hope that things get better by the summer, or certainly by late in the fall, or late summer, early fall. But sadly, I have my doubts at this point.
So Dennis, real quick, are there any places to hide? I mean, you look at some of these companies that have actually benefited from the shutdown and stay-at-home order, like a Netflix or Amazon. You know, basically the digital transformation is only accelerating in this shutdown. So is that an area to hide during this?
It's been Netflix, Walmart, and Amazon have been the only places to hide. But when you're down to 3 or 4 or 5 or 6 stocks that are leading the market higher, that sort of lack of breadth is something that I would disdain and stay away from. So am I going to be a buyer of Netflix at this price? Not with your money, and certainly not with mine. Would I be a buyer of Walmart? Not with your money, and certainly not with mine. Would I tend to be slightly net short of the stock market? Absolutely. I think that we still have lower prices to come along. Markets don't make their V bottoms. Markets make bottoms by testing again, and then going sideways for several months. And I suspect that history will repeat itself once again, I'm afraid.
So we're still testing. We're still testing how far it can go low then. All right, we'll keep watching that. Dennis, thanks very much for your insight this morning. Good to see you, sir. Stay safe.
Thanks for having me on, Maria.
Dennis
Good to see you.
Gartman joining us there.